Welcome to the cryptocurrency revolution, a new era of finance. The world is changing rapidly, and we are witnessing a monumental shift in how we perceive and handle money. A new financial landscape is emerging, one that is driven by technology and innovation. Cryptocurrency is at the forefront of this revolution, offering new ways to trade, invest, and store value. Like the internet in the 90s, cryptocurrency is transforming how we think about money, making it more accessible and versatile. It's a decentralized system, free from government control, which means it operates independently of traditional financial institutions. This opens up exciting opportunities for individuals to take control of their finances, offering a level of financial freedom and autonomy never seen before. Cryptocurrency uses cryptography for security, ensuring that transactions are safe and private. It's a digital form of currency, which means it exists entirely online and can be transferred instantly. Transactions happen on a blockchain, a public ledger that records every transaction transparently and immutably. This technology is transparent and secure, providing a level of trust and reliability that is unmatched. It's also borderless, allowing for global transactions without the need for intermediaries or excessive fees. The potential for growth and innovation in the cryptocurrency space is immense, with new applications and opportunities emerging every day. This is just the beginning of a new era in finance. Now, let's explore Section 2, Buying and Holding Riding the Crypto Wave. This section will delve into the intricacies of one of the most popular strategies in the cryptocurrency world. One popular method of making money with cryptocurrency is buying and holding, also known as HODLing. This term originated from a misspelled forum post and has since become a mantra for crypto enthusiasts. This strategy involves buying a cryptocurrency and holding it for an extended period, often years. The idea is to weather the market's ups and downs, with the hope that the value will increase significantly over time. The goal is to sell it later at a higher price, realizing a profit. This approach requires patience and a strong belief in the long-term potential of the chosen cryptocurrency. This strategy is particularly popular with Bitcoin, the first and most well-known cryptocurrency. Bitcoin has a history of dramatic price increases, making it a favorite among hodlers. Imagine buying Bitcoin in its early days when it was worth just a few dollars. Back then, few could have predicted its meteoric rise. Those who held onto their Bitcoin saw its value skyrocket over the years. Early adopters who believed in Bitcoin's potential were handsomely rewarded. Of course, holding cryptocurrency is not without risk. The market can be incredibly volatile, with prices swinging wildly in short periods. The market can be volatile and prices can fluctuate significantly. It's essential to stay informed and be prepared for the inherent risks involved in this strategy. Always do thorough research and consider your risk tolerance before diving in. Moving on to Section 3, Day Trading, Navigating the Volatile Crypto Seas. For the more adventurous, day trading offers a fast-paced way to potentially profit from cryptocurrency's volatility. This method is not for the faint-hearted, as it involves making quick decisions and staying glued to the screen. Day traders buy and sell cryptocurrencies within a single day. They often make multiple trades throughout the day, aiming to take advantage of small price movements. Their goal is to capitalize on short-term price fluctuations. This requires a deep understanding of market trends and the ability to predict price movements accurately. This strategy requires close attention to the market, quick reflexes, and a high-risk tolerance. Day traders must be prepared to act swiftly to seize opportunities and mitigate losses. Day traders use technical analysis tools and charts to identify potential trading opportunities. These tools help them analyze historical data and predict future price movements. They aim to buy low and sell high within a short time frame. This strategy can be highly profitable if executed correctly, but it also comes with significant risks. However, the fast-paced nature of day trading means potential losses can accumulate quickly. Effective risk management strategies are crucial to avoid significant financial setbacks. Lastly, let's delve into Section 4, Swing Trading, Catching the Crypto Tides. Swing trading offers a middle ground between the long-term approach of hodling and the rapid-fire world of day trading. Swing traders hold on to their cryptocurrencies for a few days or weeks, aiming to profit from price swings within a larger trend. They use a combination of fundamental and technical analysis to identify potential trading opportunities. Fundamental analysis involves studying the underlying factors that influence a cryptocurrency's value, such as its technology, adoption rate, and market sentiment. Technical analysis focuses on chart patterns, indicators, and historical price data. Section 5. Staking and yield farming, cultivating your crypto garden. For those seeking passive income opportunities, staking and yield farming have become increasingly popular. Staking involves holding your cryptocurrencies in a specific wallet to support the operation of a blockchain network. In return for your participation, you earn rewards in the form of additional cryptocurrency. Yield farming takes this concept a step further. It involves lending out your cryptocurrencies to others through decentralized finance or DeFi protocols. These protocols use your crypto assets to provide liquidity for various financial services, and you earn interest or fees in return. Section 6. Mining, unearthing digital gold. Mining is another way to potentially earn cryptocurrency, but it requires significant technical expertise and investment. Miners use powerful computers to solve complex mathematical problems. The first miner to solve the problem adds a new block to the blockchain and receives a reward in the form of cryptocurrency. Bitcoin mining, for example, has become increasingly competitive. It requires specialized hardware and consumes a large amount of electricity. However, for those willing to invest the resources, mining can be a lucrative endeavor. Section 7. Earning crypto, getting paid the modern way. Beyond trading and investing, you can also earn cryptocurrency by getting paid for your work or services. Many businesses and individuals are now offering cryptocurrency as a payment option. Freelancers, for example, can find gigs on platforms that pay in Bitcoin or other cryptocurrencies. Some companies are even paying their employees' salaries in cryptocurrency. As the adoption of cryptocurrency grows, we can expect to see even more opportunities to earn crypto through traditional work arrangements. Section 8. The allure and perils of crypto riches. The stories of early Bitcoin investors striking it rich are enticing. However, the cryptocurrency market is highly volatile. It's crucial to understand both the potential rewards and risks involved. Investing in cryptocurrency is not for the faint of heart. Prices can fluctuate wildly, and there's always the risk of losing your investment. It's essential to do your research, invest only what you can afford to lose, and be prepared for a bumpy ride. Section 9. Charting your course in the crypto sea. The cryptocurrency world is vast and constantly evolving. Navigating this exciting but potentially treacherous landscape requires careful planning and a willingness to learn. Before diving in, take the time to educate yourself about different cryptocurrencies, trading strategies, and risk management techniques. Consider your financial goals, risk tolerance, and investment timeline. Remember, the cryptocurrency market is still in its early stages. While it offers tremendous potential for growth, it's crucial to approach it with caution and a healthy dose of skepticism.